Hello everyone and welcome back to my channel. Today, as you can see, our topic of discussion is cost of goods sold, also called COGS. Now this is a very common term that we come across in the accounting world, especially the class 11 and 12 children. So let's try to understand the relevance of this term in the accounting world. Now, as we know, for a business, purchase and sales are a very common affair. They happen on a regular basis, and therefore at times it might so happen that it gets difficult to find out what is the value of the goods that is being sold at that particular moment. So we calculate cost of goods sold, or as we call it COGS, to find out the value of the goods that are being sold at that particular moment. Now, in order to find that out, what we do is we calculate it using this formula, which is opening stock plus purchases plus any kind of direct expenses which are incurred to buy those purchases, and then we subtract the closing stock. Now let's understand the meaning behind the formula. Opening stock is the value of the goods that is already there in our godown, or in our stock as we say. And along with that, during the year we have some purchases where we are buying furthermore goods. And while doing so, at times we incur some additional costs. Those are what we refer to as direct expenses. All these three expenses together gives us the total cost of the goods that we have. Now from that, we subtract the closing stock, trying to show that these are the goods which are not yet sold. And if they are not sold, then we shouldn't be calculating its cost, because if they are not sold, we don't need the cost at that moment. Therefore, to calculate the cost of the goods which are actually being sold, we subtract the closing stock of goods which are not being sold. Let's take an example to understand this. Let's say we take opening stock as rupees 100, our purchases being rupees 50, and the direct expenses incurred for those purchases being rupees 30. So if we add all three, it comes to 100 plus 50, 150, plus 30, rupees 180. And from that, we subtract the closing stock, which is not being sold at that moment. And therefore, we subtract that rupees 40, and 180 minus 40 gives us rupees 140 as our cost of goods sold. I hope this video was compact and was of value to you. If you did like it, then please share it with your friends and also comment. Thank you.